Welcome, I'm T. I'm one of the founders of MaxAlgo, and I'm here today to talk to you about the Big Money Indicator. So the Big Money Indicator is here to help you identify clean areas of interest where institutions are looking to get fair value. Now, I can see your face already. It's not that complicated, even though it does sound it. What I'm going to do is I'm going to give you a quick couple of minute explanation why the Big Money Indicator exists and how it can help you in complete layman terms. So let's just have a little look. So what moves the market? So markets don't move because of indicators or patterns. They move because of money. Specifically, big banks, institutional funds, asset managers, hedge funds, central banks, these players trade huge order sizes, far bigger than anything us retail traders will ever be trading. So why do these big banks matter? So big banks and institutions matter because they manage billions and trillions of dollars of orders. So when they buy and sell, price has to move to fill those orders. The market must adjust to find enough liquidity. Now, retail orders don't move markets. Institutional orders do. Let's just be clear on that. Now, how do we know? I'm just saying it, but how do we know that these orders move the markets? It's a very fair question. Now, to answer that very simply, this isn't theory. This is well-documented legal history. So big banks were doing something called front running. Now, front running is they were doing it with large client orders. So they were profiting because they knew the price would move when they put those orders in. Now, regulators stepped in, they fined the banks millions of dollars, billions of dollars even, and new rules were introduced to specifically stop that kind of behavior. Now, why would they do that? Now, they did that because those large orders were powerful enough to move price. If they didn't move the market, then there would be no advantage, i.e. there would be no fines. So what institutions are really trying to do? Now, they are trying to buy and sell at fair value. They're trying to minimize their market impact, accumulate positions without chasing price, and get size filled efficiently for their clients. Now, to do that, they often need price to come back to key areas. So how does price get to fair value? Now, price doesn't drift there randomly up and down without any rhyme nor reason. Institutions and algorithms push price aggressively away. They create imbalances. They let price retrace. They use volatility and liquidity to bring price back to value. This is why you see spikes, pullbacks, consolidations, and then continue. It's not chaos, it's order execution. Now, what is the goal of big money? Now, the goal of the Big Money Indicator is simple. It's to identify the most likely price area we'll return to, where institutions are statistically more likely to buy, sell, re-enter, and defend their positions. Now, we're not trying to predict news. We're not trying to chase candles. We're looking for where big money is most likely waiting. Markets move because large institutions need liquidity. Price moves to where liquidity exists, and that is exactly what the Big Money Indicator is designed to highlight. Now, let's have a look on the charts. Right, so we're on TradingView. This is a TradingView indicator, as if you haven't already guessed. So we've got a nice clean chart. I am on Heikin-Ashi candles because that is what I like to trade. Obviously, you can do this on any, but I'm going to stick to this because it smooths it out for me. And especially when I'm looking at trends, this is what I like to do. Okay, so to add the indicator, first of all, your Big Money Indicator will be under MaxAlgo-Big Money. For you to get it, you'll need to go into your invite-only scripts. Obviously, it's not in my invite-only scripts, so I'm just going to add it on there manually so you can see. This is a relatively straightforward setup. There is not an awful lot of settings or anything like that you need to worry about. This is all about building on highs and lows, and then we do all the work in the background in the indicator so that you don't have to. The marking up is something that you will need to do, but we'll go through that briefly now. So got the Big Money Indicator on your chart. So if you double click, you see the settings. You will see, just to make you aware, you may get an error message on there straight away, and that is purely because we can't currently see the lines on the chart, but they will go in a second and I'll show you how. So we'll go to settings, And from settings, this will disappear once we need to do today's date. So let's put it on today. In fact, let me put it on Monday, start the week I'm on here. Let's put it on the 12th, it's 12th of January, and this is New York Open, okay? So yeah, so that's 9:30, and there we go. So 9:45. So you'll see those lines appear there. Okay. So there will be 2 settings, not 3, just to make you aware. So on here, you will 1 and 2. Number 3 we are testing, but for now use 1 and 2. And 1 is a little bit more of forgiving, gives you a little bit more room, a bit more of a broader area when you're looking for where price might retrace to, and 2 is for when you're getting better at identifying your impulses and your swing points, and you want to be a little bit more finite and start looking for those sort of laser focused moves. Okay, so I'm just going to go with let's go with 2 for now. Okay. So as you will see, what the indicator does is it will pop your lines on here. So you have an A line and a B line, nice and simple. So we're going from a low to a high. Okay, so when we're looking at lows and highs, I'm on the 1 minute chart and I'm currently on NQ Futures Nasdaq, and we're looking at on the 1 minute chart here. Now this can be used on any time frame, but we are looking at the flow, this order flow, market structure of the market. Now, just to make you very aware, guys, I'm going to give you a brief overview. If you want to go into an awful lot more depth on this, I will show you how I use this indicator with signals, and how we use it in regards to getting where we put our entries, etc. We use it with our alpha zones, the MaxAlgo golden candle indicator that will give you particular signals, golden candles, which is available in MaxAlgo Premium, which I'll put a link in there for you if you want to have a look at that. In MaxAlgo Premium, there is also a full, more extensive course on how to use big money, but I'm going to give you a brief overview now so that you can get started and you know exactly how to use it. And if that's how you want to use it and that's all you need, then that's all you'll need. But if you want to get really into it and want to know how to enter and things like that, then MaxAlgo Premium is there for you. So let's mark up our highs and lows, nice and simple, and all we're doing is you can drag it anywhere on the line here. As you can see, it highlights a B here, and we've got a low down here, and so we're looking at these full impulses. I will go into it in a little bit more depth in regards to the more little pullbacks, but if we just go to a full move here and say, right, okay, so we've got a full move, and I'm just going to mark on and say, right, that is on a low to a high, that is a buyer's area. So that is our big money buyers. So I've saved some templates here just so I can click on and move it on. So when I want to move to look for my next level, I can. So I'm going to go to my low, to my high. What's that going to give me? I'm just going to mark these on very, very simply just so you can start to get a feel for it. We're not going to use all these, but they are here for your understanding. Okay, so this is from a low to a high is a seller's area. So we're just going to add on a 5 minute, normal 1 minute big money sellers. So even when the indicator's not on now, you have areas of confluence of where you think price might go and reject from. Now, just as a perfect example, straight away, you can see that there are certain areas of price that will get respected. But what we're going to do is we'll work our way up through them, and we'll just go through these sweeping moves and look at what these impulses do. So from a low to a high, let's mark this on. Save that template, big money buyers, there we go. And the way that I do it and the way that I trade it is that when an area has been violated, so let's look at price action here. We are bullish. We've come up at 9:30 New York Open. We are bullish. As we've come up, there's no doubt we're bullish at this point. Now on the higher time frame, we may not be. We may have come down. This may be a pullback we do actually take the high, but at this point here, we don't know that. That could be
deeper retracement on a much bigger low move to the downside. So we don't know that at that point. But what we do know is, on this short time frame right now, we are bullish. We've come straight up here. We've put in a buyer zone here, and then we've got a little retracement, and then we're back up again. So this gets violated. So I'm going to take this out because straight away that was gone. This, however, got my low to my high, and this one, as you'll see, until it gets violated, it's staying in there. As you'll see, it does come down. Look how well this respects this area. Okay, so you can either click on, to get the lines, you can either click on here, on the area, you could if it was on the box, or you can click on the thing there. Okay, so we'll go high to low. Let's look at our, again, when price comes down here, we see that that will have been disrespected. Now, real time, you will still be able to add these as you put in a low and you get a new high. You're putting in a low and you will still get this area. You're going to mark it on and you're going to wait to price to react from those areas. So one of the biggest questions that we got asked when we first started doing this, we put this out to a few people for testing, and with our back testing was, well, how would you know what areas are important and what areas aren't? Well, they're all important, or they're all not important until you get reactions from them. So the idea being is where is price getting drawn to? You'll have seen earlier in the video we spoke about liquidity, we spoke about big orders and why price is being pulled into certain areas to fair value. So we've had this pull here. Well, if institutions want to get a better price, they need to get price further down to these areas, which is as what you can see is happening. So let's just mark these up. I will put on, in fact, I'm going to put on the, I'm going to put on this one anyway, just so you can see. So we've got our bearish one. I'll mark it on so it's there, and then we won't delete them this time, just for you to get an idea. So that is big money sellers. Let's move it along, nice and quick. Now you can be a little bit more. Didn't mean to do that. Use the lines instead. So you're going from the bottom to the top, or you can be a little bit more finite here. As you see, it comes up and down and up. So this is all about learning where the swings that you want to be tracking. But as you can see, if you want to be looking for more internal moves, then you can be looking at more internal swings. If you want to be looking at the whole swing, it's like, okay, well, this is the move. This is the impulse here. Big impulse up, pull back. Big impulse up, pull back. Big impulse up. And that really is the full move here. However, you will see that even within that, you still, when you get that small pullback within that move, there is still reaction from that. So even if I go from here to here, you'll see. So I'm going to mark this one on so that I don't forget. So we've got this big money buyers zone. Big money buyers. And then we've got our next zone. Did I draw it on? Don't think I did. There we go. So there's our big money buyers zone. Big money buyers, there we go. Okay, so as you can see, as price is coming up, it's like it hasn't had anything to come to here in regards to what we've drawn on. That may be previous, but it's not here. And could price retrace down to this point? Absolutely. This is an area where buyers will be looking to get fair value for their orders. So we'll continue on up, start to see the pattern. So this, again, we could push. If we're going to go internal, we're getting sideways price action, which is where we're looking for, is it holding? And this is the point. Buyers are holding, comes down, buyers are holding. Now we get a little push down, but this is the bigger move. This was the this is the main move. Now this is the main move, and it comes down and it taps into what is a much bigger impulse here, and that retracement, and then carries on again. So if we follow that process, in regards to the full move. One up, one up, one up. So it's failed slightly there on that little move up, but the bigger move, it's stayed, it's respected that big money buyer zone. And then from there, let me just move these across. On this zone, it's then put in another area for us here. So we've got a new low and a new high if you want the one sweep. Now, again, as I mentioned before, you can be looking, we go from here to here. If you're looking for entries, what would you be looking for an entry if it comes down to here? Okay, well, it's not. See, if we're going to use that one, then you'll see that actually it comes down. We've got a little impulse up, little pullback, impulse up, little pullback. So let's just go from the last one there. Okay, so you've had this area here with indecision on the way up and that little bit of pullback. So we cover that area and you will see, yes, I can use the whole sweep, and the whole sweep could give me an area here, which is still important. So I'm going to mark that on. Like, could I get a reaction from here? Yes. No, it's not going to react from all areas. We don't want it to react from all areas. What we're looking for is areas that might react from. And from here, you can see quite clearly, this area is on the way up. There's been a little bit of pullback here, a little bit of indecision, and that has given us an area to cover. Okay, let's have a little look and say, okay, well, if it get a reaction from here, this could be the trade. It could be that it's not as much of a pullback and it's just going to tap in here, which, as you can see, is exactly what it does. It comes down. Now, if you're looking here, this is not coincidence. This is not coincidence. We've got a little pullback here and it reacts from here. If you want a bit tighter, we get a little pullback here and it reacts from here. So these areas, price is being pulled to, and that's where they're getting fair value from. So you can be looking, this is all the way up and then that first little move. So if you're going to be looking for that, you'd be looking for maybe a little bit of a scalp. You're getting a deeper retracement into here and looking for entries. You can be using a limit order. Now, obviously, we use golden candle and signals, and that's what we use as our entry system. And I will show you that in a little bit more detail in a second, just so you can understand how we amalgamate the two and make it look and feel like actually there's areas for me to take trades from, and actually I have entries for trades as well. So along here, we're still bullish, we're still going up, we're breaking highs, creating higher lows. So you see, this is where would price react from. Okay, we get a little push from here. Our next area comes down. Okay, well, if we're going to react from there, there's our high, there's our low. So it breaks, so it taps into here, it breaks through. Again, we get that lovely move out of that big money buyer zone, instantly smashing through. So this is continuing to tell us we're breaking the seller zones, we are holding the buyer zones, breaking the seller zones, holding the buyer zones. Big money buyers are in control. Let's just pop on here, we've got our low. Ridiculous. Yeah, so there's our next one. Simple as that. There's our low. There's our high. Let's make sure, is that our high? There's our high. I do apologize. I'll just remove that. Actually, it makes it even better. There's our low. There's our high. And you'll see it taps in to this area when it comes back. So, and these are much smaller impulses. And then that's where you've got to be a little bit careful. You're looking at the bigger move. And what you don't want to be doing is looking at every single tiny little move. But if you're getting a move within a bigger sweep, then why not have a little look at it? So yeah. So this is our bigger move. If I'm going to wait and say, so this is always, you always want B after A. Because if you cross them over, you won't get a box. So really, in this move here, we could be looking and saying, okay, well, this is our next move. Still breaks through. We've got these zones all the way. Any of these zones, it does take. But on the way, if we go our bullish moves. So on this sideways price action, it's this is not a big move. We're getting a couple of candles, few candles. We're not getting these sweeping moves, and because of that, it's like, okay, when we're starting to trickle through these buyer zones, it's like, okay, that could be the first indication that we're starting to break the big money buyer zones, and we're starting to respect the big money seller zones. So are we starting to respect the zones? Let's have a little look. Let's go. Did we respect this one? No, we've not respected that. Have we respected this one? No. Well, we've actually, yes, we started to tap that, so it's okay. Well, do I want to be taking a short now when we've just had our move up? That was our move. Do I want to be taking a long? No, I don't yet. I want to have a little wait. I want to have a little look. Wait for the next move. I've got here to here. You see we are holding sellers as we're coming up, but we haven't broke any of the big buyer areas yet. So I'm not looking to take any sells yet. I'm looking for price to flip if I want to start taking sells. So again, looking at sells. The sells are sells are coming up here, but our buys are still not quite holding them. What we want to see is a pull into a buy area, and we've already got these comfortable. So, and then as we tap down into this, I think it's about time that we have a look at how we would enter on these, and then we're breaking up, and that then is putting in our new area. Okay, so these aren't rocket science, guys. These are just highs and lows, and when you're looking for a price to move, and when price starts to move and gives you that sweeping move, you can then put in your area and then look for price to react from that area. So as you can see, these are fantastic. We are literally working our way up. We're bullish. We've come up, we tap in. We come up, we tap in. We come up, we tap in. We come up, tap in. We come up, tap in. It's relentless, and it will continue in that vein. We'll just continue. This isn't hindsight. These are put on before. You know what I mean? When you get to, if you want to start from this point here and say, okay, well there's my high. Well, when you're putting them in, okay, I've got to this point. We've just put in a high. Put in a high here. We've come down to here. If price is here, you're still judging this high and low. Where's price going to go from? So I've got to this point and it's coming down here. We know now that actually we're getting an impulse in this direction. We're getting a retracement. What am I looking for? Okay, and that's now my high. That's my current low. I can go down here and put down my level here, which again would be our bigger move if we were looking for a break. Yes, that would be there. But if we're going to go and say we're going to look at our overall move, so from there, actually we come down and we get the next one, and it pushes it up a bit. It's like, okay, well, which ones is it going to respect? We need to be careful on the way up. And it's not about all of them being right, it's about looking for the right reaction from one. So we've got the high, and there's our next high. Is that a high? There it is. And in fact, 1 minute, if I just pop that on there from high to low, you'll see, oh goodness me, what a peach. So yeah, the next impulse, it just a little pull back, pull up. What does it do? We got our move in here. And this is just on the 1 minute. This is not even looking at higher time frame, and that's what in the MaxAlgo Premium you can have a look. That is where Zoo will go into a lot more detail about order flow, about swing structure, market structure, and how we look at them on higher time frames to try and incorporate the higher time frame swings into this as well. But this is on from a beginners, from a sort of on the free indicator. This is exactly how you can start to look at this and say, right, well, where would my price be reacting from? I can draw on my lines, I know exactly where I'm going, and I'm just going to follow these prices. So added that there, it comes down and it taps into there. Beautiful. So let's go. As price comes back up again, as it starts to come around here, I can see, okay, I'm now getting, that's now my impulse up. Where's my next level? There's my next level. And you see straight away price starts to react from that area. So this is not guessing. This is not hindsight, even though we're looking at the past here. This is any particular time we want to look at price. We can go up and say, where are we? Where was our last high? Where was our last low? Where might price look to get fair value from? So let's just have a little look. So we have got, let's get rid of that for you. So we've got our big money indicator. Obviously at Alpha Zones, MaxAlgo, we do use the golden candle indicator as well that will give you entries. So it's how would you look to find an entry within those areas. So would you be looking for, we've got, with our golden candle indicator, we have signals, we have break candles. Some of the break candles are gold, some of them are white, which will go, you can see all that in the premium section if you want to go through that. But they are break candles when price is going back in the other way, and we have signals which are based on one of the algorithms that we put together on where we think the best entries are. So what you're looking for is entries within those areas. You're looking for in these higher level swings where you can see that prices move significantly. Am I getting a significant area where I'm getting a golden candle, a break candle, or a buy signal, or a sell signal, whatever it might be? And in these particular areas, you'll see break candles in areas where you'd be looking to take a trade from. So, for example, now this one's a little unfortunate because we do get that final push up. So in a normal area, you would look at this would usually be your high. If this is your high, then you're looking at this being your low, and because it would have taken this candle out, and your break candle is normally around here. So when you get a tap in, you're looking for an entry out of these areas. You get here, you've got this quite significant seller's area. So it's like, do you want to take a trade into it? You need to be careful and trying to get break even if you do. But you look, this is the move. What the trade you're looking for. Here we've got a move here where we've got the tap into that area that's been put on the way up here, and that big impulse up into the bullish side. It taps down into that, and we get a break candle up to the bullish side, and from that break candle, that's where you can look to take your entry. Now, where would you, the first question people can ask is, well, where would you look to take a stop? Where would you look to take? That depends on how you want to trade this. You can go below the area, you go below the low, but these trades are trades that you should be looking to get 1, 1.5, 2 R out of, trying to run through areas until we find out that we're not bullish, then we're bullish. So we're expecting, until we have seen that we are not respecting the bullish area, the bullish big money buy areas anymore, we are expecting that we're going to take this high, which is exactly what we do. So I'm playing this in that I've come down, after this big move up, I've created this zone, I've come back down, I've tapped into that zone, I've got my break candle, and I'm expecting to continue on up from that, which, as you can see, is exactly what it does, and it just continues, and you get the buy signal, and you get a buy signal. So a perfect example here, we've come this lovely move up, we get this little bit of sideways action afterwards, which we often get. We come down, we tap into the big money zone that was created by this area, by this impulse. It's created by it. It's pushed up, created this zone. It's come down here, and we've had a tap in, we've had a break candle, and bang, we are 1, 2, however you want it, even if you want it, just however you want to do it. You get a break candle to the upside here, and even if you're going to the low, you're getting, what you're talking minimum one. There's 1.5 R there, but as price will continue on up, you can see I don't really want to be holding trades for that long personally. But that's, again, it's an easy way to be looking at how and when to enter your trades. So you have your big money buyer zones, big money seller zones, and then you can look at the possibility. So if you just want to look at those areas and say, right, okay, I'm waiting for them to react from that area and look for a limit order and get an entry, you can do that. If you want something a little bit more systematic and a little bit more specific when you're looking for entries and the more high probability winning entries, then you can look at our Alpha Zones golden candle as well. And then obviously within that, which I won't go into too much at the moment, you can also add your Alpha Zones in, which will give you even more context on when to take trades from things like the hourly, the Q zone, and things like that. So this is nice and simple on the 1 minute. You can, as I say, if I'm just going to take these off. We just get rid of them for a minute. And if we just look at the 5 minute, just to give you that very quickly overarching view on that price action that we just looked at, which as you can see, it's all very bullish, and that's what we're saying. We're looking to take areas. So let's just do exactly the same. There's our low, there's our high, so there's one. You can see we've got a pullback here. This is New York though, and New York is going to be volatile. We need to be careful, because if we're going to get it wrong, then New York could be the time where volatility could kill us. So we'll go low to high. Let's mark that on. Let's put that there. So we could have a 5 minute zone, and I am going to do this very quickly. Big money buyers 5. There we go. There's just templates that I put in, and let's look. Really, the whole move is here. Well, there's the high. Draw my boxes. Let's just pull it along. So that's the move really. Let's just move that up on the 5 minute. And this is exactly the same as the one, in the sense that you can just, okay, that is a green candle still, but that is a pullback, and then it goes. There's a pullback, and then it goes. But we're looking for the impulse on the 5. Would be that whole move. There's our move, and then our next one would be here. What did I tell you? What do we get? If you want to trade the 5 minute, we come down, we tap into this area, we get a break, and off she goes. Our next one, because we're bullish, we come down here, we created a new zone, mark it on. There we go. Still bullish. Let's go for our next one here. Really, it's probably most of this next move. See, from our high to our low, creates our next zone. So as price starts to retrace, I'm now looking, okay, where's my zone? My zone's here. It comes in, taps in, we get a break signal, and off it goes. So that's just on the 5. So there's 2 entries there straight away, just on the 5, that you'd be comfortable to get. And I'm pretty sure if we just continue along like this, you will see the next area. Oh, as if by magic, you see it go up, taps back in, break candle, off she blows. Now, it's as simple as that. There are obviously there's lots more to this, and there's lots more you can do with sessions. There's lots more you can do with multi-time frame, understanding the impulses, market structure, order flow. There is an awful lot more to this. This is the simplest version. This is the easiest way for you to get started. If you have any questions, drop them in the comments. Drop me a message on WhatsApp. We are available as often as we can physically get to you, but we will answer your questions. Thank you for watching, and I will see you on the next video. Enjoy big money.